Imagine you woke up one day to find out your bank account has been wiped out. Your entire life savings has evaporated overnight, but not because of some anonymous fraudster had stolen it. It happened because the very banking institution that regulators have repeatedly told you is unquestionably strong has faltered. The bank has taken your deposit and converted it into worthless shares to ensure its own survival. You now own those shares, but you've taken on more risk than you signed up for. And there's a possibility that those shares could end up being entirely worthless. This scenario is what we call a bank bailing in your money. And if you think this is impossible or illegal and has never happened before, think again. This has actually happened many times before, and most recently in Cyprus. So ladies and gentlemen, in today's video, we're gonna go over why the bank's preparing for the unthinkable. They're facing hundreds and billions of dollars, even up to trillions of dollars of unrealized losses, and this year those losses are about to materialize. We have some new information, some new insights to show you what's really happening under the hood of the financial system. You, your family, need to prepare and need to be aware of what's happening right now, because you don't want to happen like what's happened in history, where people wake up and see the banks are gone down, you try to run to the bank to get your money out, and it's already too late. But I know what you may be thinking, well okay, how exactly did these bank bail laws come in? Well, this all came after the 2008 financial crisis, when the public was very angry with the big banks being bailed out. But instead of them saying, okay, we won't use the taxpayer to bail out the banks, we'll use the customers and shareholders instead. So that's right, when you deposit money in a bank, you're now an unsecured creditor, and the bank at any time could take that money, and in many cases they've already started to make it very, very hard for their customers to take it out. But again, this was called the Dodd-Frank Wall Street Reform and Consumer Act and was made in 2010. This allowed banks to convert debt into equity to increase their capital requirements. Now, luckily they haven't had to do this in the US as of yet, but the FDIC is getting very, very wary of the public being aware of how weak the banking system is. And we've got some footage of an insider meeting. Some of you may have seen this before, but we've also got more news that should alarm you of what's really happening under the hood with the banking system.
Important. I mean, it's a little bit conflicted, right? I mean, it's important that people understand they can be bailed in, but you don't want a huge run on the institution, but I mean, they're going to be.
People need to know, but I don't think you have much hope of reaching a public that doesn't have a professional need to know.
I completely agree with that. I almost think you'd scare the public if you put this out. Like, why are they telling me this? Should I be concerned about my bank? Like, my insurance company doesn't tell me what they're doing with my assets. If they just assume they're going to pay my claim, right? I think you've got to think of the unintended consequences of taking a public that has more full faith and confidence in the banking system than maybe people in this room do.
So that is absolutely crazy run. Did you see that video? They're saying they don't want to scare, they don't want to alarm the public. They're saying they know how really unsafe the banking system is, but they do not want you to be aware of how quick this house of cards could come crashing down. Then look at this next video of this customer simply just wanting to get his own cash out, and the bank is telling him no.
It's my money. I'm allowed to withdraw from my own bank account.
Yeah, so
You said that what's the maximum limit you can give a withdrawal to a customer? It's $3,000 on the date. You've already mentioned that multiple times.
Yeah, not today.
Why not today?
Wow, folks, that's a video going viral TikTok. That's a bank in Canada, the bank in Canada refusing to give a customer money. I mean, it was his money.
Absolutely outrageous. Again though, when you deposit your money, it's no longer theirs, and good luck trying to get $5,000, $10,000 out of the bank in the future. And we all know they're pushing for these central bank digital currencies. So when these central bank digital currencies come in, there will no longer be cash anymore, and it'll be impossible to get your money out. Now look at this. This is another clip of the biggest bank in Australia now charging customers even going in to withdraw cash from their own bank.
Well, there's been an angry reaction to a new cash withdrawal fee announced by the Commonwealth Bank. Australia's largest bank will charge customers $3 for taking out money at a branch, a post office or by phone. The change comes into effect from January 6. Hundreds of customers have complained on social media, labelling the new fee a scam and reverse bank robbery. Earlier this year, CommBank posted a $9.5 billion profit.
Ladies and gentlemen, I've got example after example on why the banks are making it so hard to get your money out, and the reason why is because the banks are insolvent, but they do not want the public to know about it. Now, we've seen recent bank failures, like we'll go over in these articles, we saw this. We saw nearly 109 million in deposits held for fintech got its customers vanished in the Synapse collapse, bank says. But not only this, how many banks failed in 2023? We saw Silicon Valley Bank fail, Signature Bank, First Republic Bank, Heartland Tri-State Bank, and Citizens Bank of Sac City. But if you thought that was bad, that's just the tip of the iceberg. And there's many banks sitting under hundreds of trillions of dollars of unrealized losses. But here's the thing. A lot of these banks were betting on the Federal Reserve to drop interest rates back to zero. So all these bonds that have lost them hundreds of billions of dollars will go back up in value and then they'll be okay. But we've just got news from the Fed that they believe the markets are being very bullish. They believe the markets are inflated. Inflation is surging again. So we're starting to see the 10-year Treasury yield go up and it just passed 4.6%. So a lot of these banks that were betting on interest rates going down, actually the opposite is happening. Because look at this, everyone. US lenders lose $46 billion as customers at Capital One, Citi, JP Morgan Chase, Discover, Citi, and Bank of America face billion in delinquencies. Now, this has happened as credit card defaults hit a 14-year high and they've already had $46 billion worth of losses, but that's about to get much, much worse. Because look at this, US banks are sitting on a massive $750 billion in losses on real estate debt, related securities, and which sectors are most exposed. Well, I think we all know which sector is most exposed, commercial real estate. And ladies and gentlemen, I don't know about you, but I'm getting deja vu. This is starting to sound very, very close to like what happened in 2008 when we saw the subprime mortgage crisis. Now, yes, borrowers are much more qualified now, but the same problem exists. These banks are sitting on huge losses on these assets, and if interest rates don't go back down to zero, they're going to have to realize these losses, and many banks are not going to be able to absorb it. But here's the real problem. It's not just the banks are insolvent, the US government is insolvent. So if you think the US government is going to be able to bail out the banks, think again. Because look at this next article. Janet Yellen warns extraordinary measures incoming as 36 trillion national debt approaches ceiling. Now, I know what you may be thinking. Look, they've done this song and dance before. At the end of the day, they always do increase the debt ceiling. And yes, well, I think that will happen. There will come a time when all these people that are buying up US government debt will finally realize that the US government is insolvent and they cannot continue to repay the debt. Or the US government will keep on this debt path, they'll keep on printing money, and the US dollar will hyperinflate. This is why your standard of living has been going down, because they keep on issuing debt and the US dollar keeps on losing more and more value every single year. Because look at this chart from Bravo Research, everyone. This signal flashed right before three major market declines. And which ones were they? 1929, 2000, and 2008. And it has just started to flash again. So make no mistake, everyone, we are in the biggest stock market bubble of modern civilization. Never have we seen so much irrational exuberance, and it's about to lead us to the biggest financial crisis of our lifetime. Don't believe me? Look at this next article. Historic New York office building fetches a fraction of its recent $246 million sale. And here's why. We can see that it recently only had a mortgage and recently sold for $56 million. So we're seeing commercial building after commercial building in these big financial centers absolutely plummet in value. And guess who's going to be the big loser? That's right, the big banks. Now, I know what you may be thinking. Well, look, it's fine because it's FDIC insurance. Well, have you ever thought to ask the question, how much money does the FDIC actually have? Well, look at this, everyone. As of the third quarter of 2024, the Federal Deposit Insurance Corporation FDIC Deposit Insurance Fund has $123 billion. This is only a 1.21 reserve ratio. That's right. They don't even have 5% of deposits covered with FDIC insurance. And have you also asked the other question, how much money is there in the US banking system? We'll look at this next chart. There is actually $18 trillion worth of deposits in the banking system. And that's right, the FDIC is only insuring $130 billion. That means if just one major bank went down with over $1 trillion worth of assets, this is actually 10 times more the amount the FDIC has. Because what you have to realize is the US banking system is a house of cards, and the only thing it relies on is confidence. Once that confidence is lost, we will see bank runs like you've never seen before. But people, the rampant speculation, the irrational exuberance that happened in 1907 and 1929 is repeating again today. And I think it's just a matter of time with all the evidence that I've showed you that something's about to break in the financial system. Now I know what you may be thinking, well okay, how can we prepare for such a crisis? Well, it's very simple everyone. Diversify your bank accounts. Don't have all your money in the same bank. Also, have some cash on hand in case your bank goes down or the whole financial system goes down. And invest in other alternatives of money, real money, that is gold, silver, have some Bitcoin in a cold storage wallet. Again, not saying go all in Bitcoin, but that's just another way to diversify. If you do those few simple things, you'll be completely okay. And you'll actually be more than okay because the markets will be plummeting. No one else will have money, but you'll have money and you'll be able to buy assets for pennies on the dollar. So everyone, what do you think about this crazy topic? Do you think we are only moments away from a bank bail-in the United States? Let me know down below. Now, for my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.